Good afternoon, I'm Brigid Taylor and this is Currency Wars. Today I have Jan Sluis-Cremer from RMB in studio with me, so let's first take a look at the wires, however. Focus has now shifted to the anticipated budget speech to be delivered by Finance Minister Pravin Gordhan next week. The minister met with a number of business leaders, and Gordhan again wants to discuss measures of how we are going to stave off a downgrade and boost economic growth. Meanwhile, Moody's put out a global warning on its global macro outlook for 2016-2017. The rating agency said that growth prospects are dimmed by the Chinese slowdown in commodities, the commodity price slump, as well as the tighter financing conditions in emerging markets. Moody's also mentioned concerns about South Africa's capital outflows and highlighted the lack of confidence in President Zuma's government. Meanwhile, the World Bank says that South Africa is at a risk of recession this year, but could recover in 2017 if we boost our exports. Yesterday, South Africa's inflation numbers breached the Reserve Bank's target range. The rates accelerated to 6.2% in January, and this was from 5.2% a year earlier. This is largely due to the accelerating food prices as well as the weaker rand following the country's drought. Now that we've been through the lay of the land, and I'm going to hand it over to Jan, we're going to talk about the rand and where we can expect it to go in the week ahead. Jan, welcome.
Thank you.
Right, so we've had quite an interesting move. I think, a lot of people kind of thought that 1580 was going to be a good support. Let's start off first of all, and let's just focus on what's happening globally. So the oil price is still under pressure. We're seeing a lot of pressure coming in from that fracking community in the US, trying to push for oil prices to be slightly higher. However, obviously the Saudis want to keep it lower just to keep those people off the table. If we look at that global scenario, do you think that oil prices are going to continue to remain low?
Bridge, I think oil prices are here to stay low for a while now. We had the Russian Minister of Oil and the Saudi Prince meeting earlier on this week to discuss, because obviously Russia is also adversely affected by the low oil price. Oil spiked on the back of that, but it was a short respite, came straight back down again. And I think, for the moment, I wouldn't like to be in the fracking business anywhere, never mind just in the US. And it's a very tough industry and environment to be in. And I think as long as there's still a glut remains of the product, it's going to stay low for a while. There was an article yesterday or the day before where they said, parts of the UAE are practically giving away oil free of charge. They have so much stock available.
Well, this is the thing. It's a problem because, if we look at the ratings agencies and some of the decisions that they've made recently, if we look at Brazil, for example, anyone that is an extreme exporter or has a very heavy reliance on exports that are in the commodity sector are coming under pressure and potentially will be downgraded with regards to their ratings. So, with regards to South Africa, we're not an exporter of oil. However, our commodities have plagued our economy. From that perspective, do you think we're going to see further fallout if we look at how much our brother countries in Africa have spent, budgeting at around $60 a barrel? We look at the likes of Ghana, Nigeria, Angola, etc. Do we think we're going to see further fallout of that type of scenario?
No, look, I certainly do think so. The one advantage of South Africa is we're a net importer of oil.
Yeah.
And I suppose in many ways that's sort of saved us a little bit. Perhaps inflation would be a hell of a lot worse than it was if, let's for example say, oil was still at $60 or $70 a barrel. I'd hate to have seen when yesterday's number would have printed. So with the rest of the commodity cycle, we are affected, we have been affected, and we're going to continue. As long as China and everybody else is in slowdown mode, we're gonna feel the impact and the brunt of it. And I do think, unfortunately, and it doesn't matter what goodwill is intended, it certainly seems the writing between the lines with the ratings agencies is, unless the finance minister pulls a complete rabbit out of the hat next week, I think downgrade is inevitable.
Sure, and that's a big concern. Let's take our eyes to the US. So the US Fed at the moment on a hold, and they're remaining extremely dovish, and for the reasons that you just mentioned. However, in South Africa, our finance minister, thank everything good and pure, is doing the right thing with regards to engaging with business, because that's something that has to be a good synergy in this country. What have you heard with regards to your clients talking about how they feel about that? What is the sentiment out there? Do you think it's just pie in the sky, or do you think this is really a strategy that could work?
Look, I think it's a strategy that definitely can work. I think it's perhaps long overdue. I think for many, and we can sit and debate all the good points and the bad. You know, government has kind of run on its own and never really consulted the private sector. And it's come to a crunch now where they have no alternative but to engage with the private sector. And some tough decisions need to be made along the line. You know, we can't continue having, you know, your state-owned enterprises being the sort of the bulk employer in the country and that are costing an absolute fortune to manage and maintain. And all they do is they lost leaders, and it's the likes of you and I and the other average taxpayer who's funding all of this. It's got to stop at some point. And I think now with the finance minister engaging with top business is probably a step in the right direction, and hopefully it's not too little too late.
Yeah, well, this is the thing. At least we're doing something in the right direction. Let's bring our eyes back onto CPI, Jan. And one of the interesting things I saw recently was somebody made a comment about we worry too much about the levels of the rand. People are blowing it out of proportion. We're not exposed to the US dollar. We're not exposed to foreign currencies. Now, I mean, I just want you to clarify that for all of us in terms of what is the impact when the rand weakens at the levels that it has, despite the fact that oil's sitting at $27 a barrel. We're still seeing inflation at 6.2, and unfortunately that impacts everybody, right? So maybe just go through that in terms of your mindset.
So if the rand doesn't affect inflation or anything else, then I don't know what world you're living in.
Exactly.
Unless you can't even say if you're growing your own carrots and lettuces in your back garden and you're completely self-sufficient, because generally even those seeds are imported. So as a nation, we are net importers of basically everything, from food right across the curve. So everything at some point that you touch or engage with during the day is a product that comes from overseas. So
and that becomes more expensive as the dollar weakens. So people need to understand that it really does matter in terms of where our rands go.
No, 100%. You know, and we've got to be cognizant of the fact of, you know, what the rand is doing, and it has become a lot more visible over the years. You know, people these days do pay a lot more attention to the rand, and it does. It forms part and parcel of your business. You can't just say, well, I'm making widgets for a little company that's a local-based mining company or a manufacturing company, so the rand doesn't affect me. It does, because you're going to be importing some component, and managing that currency risk actually now becomes.
And even if you're not directly importing it, you're actually getting charged from the person who has to import it.
Well,
so along the line, you're paying it whether you see it directly or not. And then just lastly, let's just look at the overall sentiment. So we've had the Reserve Bank hike by 50 basis points. We're starting to see other weaker emerging markets do the same. Do you think that was a good move or bad move? And lastly, do you think they're going to hike again?
Good move or bad move, I suppose time will still tell on that one. You know, it takes there is a bit of a lag time before we start seeing the effects. However, seeing yesterday's CPI number, I wouldn't be surprised if we're in line for more rate hikes, because the central bank has made it very clear that targeting inflation is their
main mandate.
Is their main mandate, and they want to keep inflation under control. We've seen elsewhere with some of our neighbouring countries when inflation's got out of hand and what's happened there. So you can understand their anxiousness around to keep inflation under control, and because otherwise it will have a tendency to run away, especially with things like the drought, where we're now going to become a net importer of maize. Yeah. You know, and the weak rand doesn't help the process in that. So keeping inflation under control is a massive, you know, task for the central bank. I do think, however, that, you know, we just got to watch next month's print before we get a little bit ahead of ourselves. Sure. Of, you know, rates are going to go higher again. Let the last couple of rate hikes start feeding through.
And the stronger rand.
And now that we started seeing a stronger rand in the last week or so.
I have to cut you because we're going to move on to plan of attack. So prepare yourself, Jan. He's going to give us his views for the week ahead. Right, Jannie, this is it. So give me your view. I know it's very tough at the moment. We're sitting at that 32% FIBO retracement, sort of that around that 50 and 40 level. Talk to us about what your views are in terms of if that breaks, where we potentially can go, and what the likelihood of it breaking below those levels is, and then what the impact will be on our cross currencies.
It's quite a lot. So we've seen over the last couple of weeks, and I think we spoke about it the last time around too, you know, the rand is starting to run out of strength on the top side. You know, the rand being a currency of extremes, you know, when it's looking doom and gloom, everybody thinks we're heading to 20 and beyond, and then suddenly you find yourself going the other way. Now everybody's looking for it to go back to the 10, 11 levels. You know, that's unfortunately, I suppose, fortunately, what makes a market many times. I do think, though, the rand ran out of steam on the top side. We continued to fail around that 1625, 1630 level. We then broke down through the 16 level. 1590 then became that kind of catalytic point where it couldn't get itself above. And then yesterday was quite a big day, because we've had for most of the week and towards the end of last week, we'd had that 1572 level, which was good support. That's your 55-day moving average support line. Or now resistance line. It did take a long time to get through it. And yesterday, I think, with the CPI number coming out, and people just go, well, hold on, CPI printed a hell of a lot worse than expected. So maybe there is some time, you know, interest rates are going to start creeping up again. We've also seen a little bit more of a risk on in emerging markets the last couple of days. So we closed below that 72. We're at testing that 38.40 level today. Through there, as you said, big FIBO level. If we can get a daily close through that, 1495 definitely becomes your next target line.
Okay.
And I actually just think the way things are going at the moment, you know, we've been talking about a pullback since early January.
Yeah.
And all the bad news is out there. You know, if downgrades you can already say is part of it's been factored into the weaker rand that we've seen. We know everything. There's nothing really untoward or.
So you're saying that the momentum is at the moment looks like we're a little bit overdone on the top side, and there's potential for us to strengthen slightly more if we break through this sort of 38.40 level.
Very much so, and pretty much like that 70 level worked most of last week. You can bet your bottom dollar we're not just going to cruise through there today or tomorrow for that matter. Okay. So it's going to take a bit of time. So now we've just re-ratcheted our range a little bit lower. Last week and up until yesterday we were in that 70 to 90 range. We're now going to be in that 40 to 70 range, because now obviously that 70 becomes your resistance level on the top side. So for the next couple of trading sessions, look to trade that range. But I do think in the weeks, after the budget, so let's also just bear in mind we got budget next Wednesday, so people are going to be a little bit nervous. But once the budget and everything is out of the way, I do think we can look for a stronger rand.
Good. So you're a man of good news. Thank you so much again, Jan. So just in conclusion, trading strategy for the week ahead is really just watch the technical levels. We're watching that 1538 level. It's a big level to go through. If it does break through that, we significantly may strengthen down to sort of 1495. However, it is a good base to watch as an importer. And then on the top side, looking at sort of 1570. The big risks to keep an eye on is obviously comments from the ratings agencies, as well as the budget decision and the budget announcement next week. But until then, you are more than welcome to send any of your questions or comments to either at Currency Wars 410 or to myself at K on Capital for your personal response to the FX markets. Until next week, good luck in the trenches.